Majority of commercial investors are wasting and throwing away millions of dollars every single year by not understanding these 10 main ways to do value add. Most investors, all they think about is maybe upgrading management, maybe doing some kind of automations, maybe they're trying to do some kind of value add in terms of expansions. But the real money, the kind of people who are institutional buyers and investors, BlackRock sized companies, and family offices, a lot of our clients we work with are doing at least a combination of one or two of these at a time, if not many possibly can. And this will help you understand exactly how to get the most amount of returns on your investment and make the biggest place possible, adding an extra $1,000,000 a year or more to your bottom line. My team's done $1.6 billion transactions over the past few years, and this is what I see time and time again after working with my clients so closely, helping make more money. Number one on our list is land consolidation. This is a huge, huge value add that most people never ever do. And the big one is assemblage. If you can find plots of land that are not connected yet and create them into a master power piece, massive parcel, you will have massive value for yourself and for your clients or for your investors when you do this. This can be helping the land have higher density potential, better zoning. It could be a bigger future development deals with more room to grow on and to build on. All of these strategies here allows you to really maximize your return and increase the dirt value without doing anything to it. All you're really doing is you're finding a few parts of land that are disconnected from one another. And you say, I'm going to buy all of these together, assemble them, and make one master parcel. And that one change alone can have a 3x value of that land. So if this land right here cost you $1,000,000 separately and combine them together, you just made potentially $3 to $2,000,000 without doing anything other than just assembling land together in this one big package. That is number one on our list. This is a value that most people have no clue is so massive. Number two, goes hand in hand to number one aspect over here. It's going to be entitlements. Entitlements or rezoning is a massive play that I think is underused so often. And what happens is a lot of times you have investors who will sometimes do the inclination and entitlement. More often than not, someone did the first part already, so did somebody else. They saw the value, they entitled it, did the zoning versus variances, different permitting, utility approvals, environmental and traffic studies, and of course, even sometimes the whole development site plan itself. All of these is a big part of entitlement that they do. Now, this is where I think the king and queen lives on. These are like the two biggest ways to make massive plays with little risk. Obviously, the best one for like the king play is later on in this video. And of course, I'm putting down 10 of these. So make sure you stay to the end to see each one of them. The last couple of them are going to blow you away. But this here, this is a 3x multiplier. Entitlement can be a 3 to 10x multiplier. So if I bought this land from these people for $3,000,000 and I increased it, let's say even like half as much, aim from the middle, I can now resell the same plot of land for $15,000,000. I bought $3,000,000 for it. Now, don't think that you just did this at any cost out of pocket. because you have to do, permitting and underwriting and all these different strategies to afford to do this. It may cost a couple $100,000 to maybe even $1 million to do so. So it is a risk. Don't think it's like, oh, get risk quick. No risk at all to me. You're buying land, and if that land deal can't be entitled the way you want it to be entitled, you just waste a lot of money. And maybe you break even, maybe you have 2x. It's still pretty safe, but it's not guaranteed that you will have a massive play out of it. Like, you become the one who created the value though when you do this. This is big. And of course, if you want extra help and support all things commercial real estate, down below, link in the description or the first comment of this video, how to call me directly. I can help you understand every single process of value add, buying deals, selling deals, and so much more. We've broken records for our clients time and time again. We're giving them the best deal possible when it comes to commercial real estate, and any kind of real estate, actually, for that matter. This is number 2 on our list. Entitlements. We have land as the first one. Number 3, which is a super fun one, is going to be the big money maker, which is development. Development is our next big cash cow. Most of you already know this one because it's what most investors aspire to become into. There's kind of 2 types of developments. You have the ground up development, from the soil, the land, all the way up to building skyscrapers, buildings, facilities, storage units. All these are strategies of land up development. Number 2 is adaptive reuse or redevelopment. Now, people like Sam Zell and William Zuckerdorf are some of the biggest players who lived at one point in time at doing this. Where they'll buy underperforming assets, structural places, and make them super worthwhile. Now, I think redevelopment is a safer play than actually doing development itself because it costs less money. It could be, turning an office building into industrial. That could be making a retail a medical place. That could be a grocery store into a store facility. It could even be when you buy an apartment complex and you then turn it into condos. So then you can sell each unit separately, get more money. So all these different strategies you can really do to maximize your returns. Here in Austin, Texas, where I'm at currently, I see tons of people buying student housing that is full lease per unit at the apartment complex. And instead of just keeping it that way, they're saying let's redevelop it, is rezoning in a way, into condos. And then their cash play is astronomical larger for that one single strategy. And these are the 2 ways you can really do it. Now, it comes down to your background, what you're doing, of course, the entitlement of the thing as well, what you kind of build on top of. All these make a massive role when it comes to development properties, but I think it is one of the easiest ways to make massive plays. I know people who are making $50 to $100 million in profit off of one single transaction. It took them 3-5 years to do. So it's crazy. Well, 3-5 years to complete took them like 10 years of like owning the property, waiting for it to be, usable for that aspect, and then building. But of course, you know what I mean? They're like, that's a massive play you can get though. Our next one on our list is stabilization. Stabilization is our next big one. This is probably what most people actually do currently who are doing value add on a commercial asset. That is, improving the DSCR. That is increasing vacancies or decreasing vacancies in a way. That is re-tenanting. That can be, raising rents to market. All these strategies is an easy way for you to stabilize the properties, fixing rent rolls, clean up the management and efficiencies. This is where most investors start and live. Not many will graduate to the other 3, and the next 6 on the list coming up pretty soon. The next 5 on the list coming up pretty soon. All of these, I think, are a easy way that makes a super easy value add that is really safe, and you buy underperforming assets. Now, over here, a whole breakdown that breaks down for you how to underwrite deals, what to expect, and how you can really move forward in that point of view. Because if you're stabilizing a deal, normally that means you're buying a C, B sometimes or D class assets. And it has probably pretty high cap rate because it needs to be fixed and stabilized into a performing asset that's actually safe for you and for your expansion. Now, on an expansion note, number 5 is a step down from development, which is expansion plays. Expansion plays, as it sounds, is expanding on what's already happening on this property. Now, there's physical expansions and the unit mix expansions. When it comes to physical expansions, this is going to be like adding more buildings, adding more floors, building more storage units. It can be as little as like doing better parking or covered parking, maximizing unused and used land on the places, adding more rentable square foot. All of these strategies is expansions when it comes to physical expansions. When you have the unit mix one, that could be okay. I'm gonna buy this apartment complex and I'm gonna combine rooms together, combine buildings together, make one big unit, making the penthouse better. May have the whole top 2 stories of the building now one big penthouse. This is also unit mix optimization. All these strategies help you make a property more worthwhile, and of course, it is risk, but expansions is a easy way to get a higher NOI without having much of a headache. Let's say it's a storage unit, for example. If that storage unit has a lot of big units on them that are not being used, but all the small ones are being used, then great. Let's break up that big one into small ones, and you already increase your NOI and have less vacancies. Maybe it's the opposite. Maybe the small ones are always vacant. Let's combine 2 or 3 of those together, make one larger one. So there are ways you can buy assets and make them worth more for you without having to break the bank by doing so. This is again one step below development. This is honestly what I say to all my clients. So hey, if you want to do development one day, you should get into the expansion part to get a good feel for it. It does take time, it does take money. Number 6 on our list, and make sure you can see my whiteboard still. Yep. Number 6 is operational. This is when we are increasing our efficiencies on an operational level. I love these kinds of assets. If we're buying a commercial unit that is a multi-family, or if it is a storage unit, or an RV park, or industrial building, all of these have operational inefficiencies and efficiencies you can obviously increase by cutting unnecessary expenses. Let's say the management costs you $50K a year, and you have some automations, some different strategies, and part-time work. You have some negotiating, and you go from $50K to $25,000. If the NOI you had was $100,000, making it a 10 cap at $1 million property, you go from a 10 cap to a 12.5 cap rate just by increasing or just decreasing the management side of things for your bottom line NOI. That is an easy fix. I love seeing operational properties that are not performing correctly. That is for you a gold mine. It costs you almost no money, a couple of phone calls, a couple of meetings to make it better. Can you decrease the expenses? Can you increase the rent? Can you make payroll lower? Can you do better outsourcing? Can you improve collections? All these strategies, this operational efficiency, this being better managers, running the business better. And you can buy a property for $1 million, increase the cap rate, increase the operational efficiency of this property, and then resell it 3 to 9 months later for double the value, but without doing anything. Like right now, for a good example, I have a client, we have a deal right now that is a storage unit. We were buying for $600K. Once he improves the operational management and stabilization of the property, he can then refinance for $1 million minimum and that's like 6 or 9 months from now. All he did is a couple of phone calls, better management, better systems, and that one thing alone can increase your NOI by 20 to 40%. That ain't a whole lot. Number 7 on our list is demolition. Demolition is great. It's highest and best use reset. This is when it sounds like I'm gonna find a building that is obsolete, that's not an asset anymore, not a liability, and tear it down. Like for a good example, William Zeckendorf, who's a Monopoly player of real life back in the day in the 40s, he used to buy a property called the Slaughterhouse in New York and then rezone everything and got everything tore down and created the City X inside the place that's still being used to this day. And by doing that, he bought an obsolete property, demolished it, and then made it worth 10 times more than a whole lot. So sometimes what you're buying is the land. A lot of times that actually happen though. Demolition, like, hey, I know this land value is better. Or right now, let's say I want to prep for redevelopment. Or let's say that the zoning laws have changed. And yeah, I make it a better place for yourself moving forward. And of course, the biggest one is this land is worth more than the property itself. Not likely, again, I think demolition is not used a whole bunch, but it does happen. Like you do see stuff like in residential real estate, this is way more common. You find old homes that's actually cheaper for you to just tear them down, build a new one, and upgrade the current house itself. In commercial real estate, that does happen too. If you buy like an old like industrial building or office space building that has been around since like the 20s, and like, okay, this is falling apart, let's tear it down, or either restructuring of it. This is kind of development as well. Makes it better for that point too. But that's the big part of it. Now, the next 3 I'm going to bring down for you are going to be a huge game changer, and I bet you most of you have not heard this yet. Number 8 is a really popular one amongst people who are super savvy when it comes to really structuring their deals correctly. This is capital structuring. Capital structuring is as it sounds. I'm going to refinance my structure on this property. That could be bringing in an LP entity or equity. That could be lowering my cost of capital. That could be refinancing. That could go from a bridge loan to a permanent loan. That could be from a recourse to a non-recourse. It is refinancing to better debt. Sometimes it is buying out other investors in the deal. All these strategies help you boost your IRR without having to touch anything but the building itself. And a lot of small operators do this every single year. A lot of them do it every 1 or 2 years. They said, okay, I've already stabilized it. Let's refinance, pull out my money to pay off my investors, buy them out, and now my loan's lower, hopefully, or, you have more bank money to bank. Without sharing the assets. So capitalization structuring is simply a really powerful one that I think is not used enough. For a lot of investors, the exit strategy is selling, which is good sometimes. But with this alone, you can find a way to keep the assets if you want and not have to go through that whole big breakdown. Number 9 on our list is tech plus automations. This, as it sounds, this is way of the future. A lot of investors are buying, storage units, and they're making everything automated. They have third-party employees, call centers, lock people, and so forth. They have remote management. All these strategies allows them to then decrease the management side of things from 100K, 50K to 10, 20K per year on that asset. It's a huge lift to the NOI, and of course, out of the net cash flow they're having for themselves. It can be online leasing. There could be cameras. It can be punch codes. It can be gates that are automatic. You have a code for it. This is super powerful when it comes to storage units, flex spaces. It's good for retail centers sometimes. Offices is really good for that one. You can definitely automate office spaces, knowing that you can be there. Industrial can be good for this too. Multifamily not as much, obviously, because it's a super people business. But for a lot of these things, though, you can definitely automate add tech to it. And this is an easy way to add a lot of pure NOI to your business. This is more money for you. That breaking the bank. Of course, some of this tech stuff that costs money, adding gates that cost money, is capex. But OpEx and capex, I think, are the two biggest ways to make massive plays in your investment empire. And of course, the last one on this list is obviously more ways to do this, because if you're doing commercial investing, it's all about creativity. If you're super creative, or you have it like myself helping you become more creative, helping you do different strategies, there is no limit to your goals. You can do whatever you want to for the most part, because it is all about best use case studies. Number 10, my top of my favorite list ones is marketing plus branding. My background is marketing and branding. I'm a host for TV shows on Amazon Prime, HGTV, Apple TV. I reach millions of people every single year. And my business is so large, thanks to one, I'm a workaholic and I love doing real estate, but two, because I am a master at marketing and branding. I was spending over $250,000 over the past few years investing in skills when it comes to business and marketing. And this is a massive one for you guys to make a huge lift to your bottom line without having to do a whole lot of effort. That is running better ads. That can be new signs, new websites, better SEO, video content. All these strategies can really help you have better marketing and branding on your commercial assets. And I think in commercial real estate especially, this is so powerful because it's underused. A lot of commercial investors have not cracked the code of this. In residential real estate, this is my original background, is top agent in the country, is all about marketing and branding. And it hasn't transferred over to commercial real estate yet, so you can transfer that same marketing and branding strategies into your commercial assets. It's massive. Like WeWork is so big, or was so big, it's still pretty big, I guess, because of the marketing and branding. That is the great equalizer of your property. If you can increase your branding, make tenants pay more, make raving fans of your establishment, you then have a higher cash flow every single year, and of course a business that can stand the test of time. So a quick recap of all these strategies you can use for a massive value add in your next commercial and real estate investment. Number one is me land consolidation. Of course, Assemblage is the real name for it. We're going to combining little parcels into one big master parcel of land. So then resell or then to re-entitle, number two, myself to get even bigger lift on the land value. Entitlement, this as it sounds, in some ways, I'm going to do rezoning. I'm going to get better permitting. I'm going to do site map plans for development. All of these strategies is entitlement for the land to make it actually be usable and worthwhile. Number three is the next step of this too is development. Development is building out a new building. It could be redevelopment if I'm buying an existing building that's falling apart, but it's not quite demolition yet. This is going to be development there. Number four is stabilization. I'm going to find a property that is underperforming. It has bad rents. It has bad management. It has not high enough rents, a lot of vacancies. All these strategies can be stabilized into a performing asset, make it a legitimate business. Number five on our list is expansions. This could be adding more units, adding more floors. They can be combining floors together. All these can be expansions to one way or another. Number six on our list is operational. Observational is going to be the actual business running of the establishment. If it's a family office or office space, that could be increasing, the management side of stuff, having better flows and processes, and it's running the business better, decreasing expenses, increasing your NOI and your income. Number seven, demolition. Somebody demolishing a building that's not usable anymore because it's obsolete for one reason or another, or the land is by itself is worth more money for you. Or I might do demolition to do a new plan of these three steps and make something better at that point as well too. Number 8 is capital structuring. This can be buying out other partners. It can be refinancing. It can do from a bridge loan to a perm loan. All these strategies help you have more money in the bank. That whole lot changes. Number 9 is going to be tech and automations. As it sounds, I'm going to add in more automations, more tech. I'm going to have better processes involved, hand in hand, honestly, with operational. And then, of course, marketing and branding, same thing. Operational is kind of part of this as well, but it's a different little segment of it. We're still just doing better marketing, better branding, more content, more videos, more blog, SEO, more events. All these strategies, marketing and branding. And you combine more than one of these together on each thing you invest in, your income and your wealth will skyrocket. Now, of course, in the comment section down below, which of these is your favorite one? Which one do you like the most? And which one is new to you? And comment, let me know down below which one you like the most, which one's new to you. And of course, make sure you hit that like button, tag your friend, use the sale. I'll see you at the top. Thanks for watching. You need help with buying or selling real estate down below. Link in the description. I'm here for you. I'll see you at the top.